Hey everyone, hopefully you're killing it in the markets today. My name's Andy, my channel's Finding Value, and what I'm going to go over here is kind of the commodities that I think are good commodities for this commodity bull market. They're ones, I'll go through them, I'll say kind of my opinion on them, and I'm also going to go over investing options like ETFs, ones that I like, investing options in terms of individual companies. I'm not going to go over all of them, but just kind of a rough overview of some of the diversified mining companies, maybe some favorites that people have. And I'll go over when commodities do, incredibly well. They are not a deflation play; they are an inflation play. So I'm going to go over some of that as well in this clip. So let's jump in here. I call this commodity by finding value. So the sectors that I really like, I like uranium. The reason I like uranium is because you've got nuclear energy. Nuclear energy, it is one of the safest, produces no emissions, and it provides baseload power at a pretty good price. We don't really have anything that's emissionless that can provide baseload power outside of uranium. So this is another positive, is that uranium takes up a very small footprint. It's a very energy dense source, and they can build one little plant somewhere and run some wiring to it versus solar and wind, which is scattered all over the place. It takes a lot of area, takes a lot of copper to run all these lines connecting each other. So if we were ever to get to a copper problem or shortage, uranium becomes actually more valuable. Solar and wind, I think, would be a lot tougher to implement if you're constrained by copper, if it were to ever get constrained. I'm not saying it is, but if it were. Now, I like oil and natural gas because that's our current energy source. I think oil does have one last big bull market out of it. And I think natural gas is the bridge fuel between all this stuff. And if solar and wind, since they're intermittent by nature, natural gas, liquefied natural gas, all that stuff is going to fill in the gaps. So that's the swing producer. And they've been running natural gas quite hard. A lot of these states and countries that have a lot of wind and solar. So they rely very heavily on natural gas. I've got liquefied natural gas there. You can lump that in. Copper is that's the metal that is going to bridge us between our current state to a future state of more electricity-driven country. Electric vehicles, renewables, all that stuff. Copper's the connection between all of it. Tin is another one that's good. We use it a lot in circuit boards and electrical connections. Think of like solder and all these things. Tin is actually one of the most used metals and has one of the highest impacts for a electrical world. Silver is also up there. We are going to use more and more silver, as that is also used for electrical traces in circuit boards. It's used a lot in computers and technology. It's all over the place, but it's a very good investment because it's also a monetary metal. So it has lots of uses. It is cheap, and it also is monetary. Platinum and gold, I would also say, are monetary metals. Platinum, and I know some people are going to debate platinum with the monetary metal. It's a precious metal. It's a new kid on the block. It's one of the hardest to melt down, and that's why it hasn't been in the game as long as gold and silver. They didn't know what to do with it. They didn't really even know what it was because it takes so much energy to melt it. It is the king. It is if gold is the what the kings hold, the gods hold platinum, because platinum is out of this world. It's found in meteors and stuff like that. But platinum's got many uses. It has its uses in a hydrogen economy. If we can't figure out a way, or we don't have enough materials to make the batteries to do this stuff, and I don't think we will, you just have to make too many, far too costly. I think a hydrogen economy is actually much more viable than trying to store copious amounts of electricity in batteries. So platinum does have its place. It is in hydrogen fuel cells. It's found all over the place in many things. It's in catalytic converters. It can also substitute palladium in autocatalysts. So that's a good spot. Gold is your monetary king. So I've got that in there as well. And if we have monetary problems, gold is what you want to own because that's what all the banks own. Lithium, graphite, nickel, and rare earth are kind of the play of the electric vehicle renewable world. So I put those all kind of grouped together on the right-hand side. Copper you can use as well on that right-hand side, but they're intermingled. Tin, silver, copper, lithium, graphite, nickel, rare earths. Those are the ones that are going to be used for that other side of the world. So I think all of these investments are going to do incredibly well because of many reasons. Because of, we'll call it dollar weakness. They're commodities. They are priced very cheap right now. And I think we could see increased uses into the future with another bridge to another world, so to speak, an electrified world. Now, my approach here is I'm overweighting the diversified mining companies. They pay dividends. They are diversified by nature because they're mining many different minerals out of the ground. They're basically mini commodity companies because they mine so much in so many different commodities. They also are well capitalized and they can do massive projects. I also like royalty companies quite a bit. They are diversified by nature again. They have many different royalties against a bunch of different projects. So really, they're just a holding company of royalties. And I like that they're diversified. I like that they're not subject to input costs. And their diversification lowers risk. So you have a direct way to play an asset or a commodity if you want to, or you can play many commodities and get diversified by nature on a whole bunch of different projects. And if one project fails, it doesn't take the company out. A lot of these mining companies, they only have one project, and if they have a problem, they could be completely wiped out. So that's what I like about it. And again, you could do the ETF approach. You can overweight that if you like. That is diversified by nature as well. So those are really, I overweight my diversified areas. Now, on the right-hand side, individual companies that are not diversified. You've got producers, developers, and exploration. I've got exploration in the red because exploration carries an insane amount of risk. You can have a piece of property and it won't find, they don't find anything. So this is more like, I'll call it more like gambling. So you really want to figure out a betting strategy or an investment strategy where you position size correctly your portfolio in exploration. Now you can get a little more aggressive on producers. And if you've got good management teams that have a good deposit, then you can, maybe overweight the developer that you think is going to do well. But overall, those ones on the right-hand side, I don't have as much money in as my overweighted positions on the left-hand side. Now, some of the options for ETFs, just to go over it on the left-hand side here, oil is XLE OIH. OIH is energy services. The other one's exploration and production. Copper is COPX. I think that one's pretty solid. Uranium, the favorite is URNM. Rare earth is REMX. I like that one quite a bit. Silver is SILJ. That's a silver junior. Kind of swinging for the fences there, I guess. And gold is GDX and GDXJ. Those are my favorite ones that I follow. And again, this isn't recommendations. It's just financial education. I'm just getting names out there. Royalty companies for gold, Franco-Nevada, FNV, Wheaton Precious Metals, WPM, and Royal Gold, RGLD. Those are the big boys. And Franco-Nevada also has gold. Usually gold and copper are intermingled together, but they have a whole bunch of things. Wheaton Precious Metals there's a lot of silver in there. I believe it was silver Wheaton Precious Metals, or silver Wheaton is what it was back in the day. Junior companies, Ely Gold, and Teuton Resources. Ely got bought out by Gold Royalty, but Ely was, I own a big stake in that one. I own it, Teuton as well. Those are kind of my leveraged royalty companies, and some of them, Teuton Resources they don't have any producing royalties, I think, at the moment. I think it's all exploration type deals, and they're up in the Golden Triangle, and I think they have some good properties there. Copper, I like Nova Royalties, my favorite. It's a small little copper company that's getting a bunch of royalties. They don't have anything that's producing at the moment, but they do have royalties on a lot of exploration companies with big major companies. EMX is another one that I look at. That's more of a diversified royalty company. And then uranium is Uranium Royalty, UROY. And then on the bottom there, if you guys are interested, it's not necessarily a commodity, but I think it's one to watch, is TAN, solar. It is still pulling back. Not saying it's a good time to buy right now, but it's one to watch. And I think if they're going to dump a bunch of money into solar, I'm going to have a little bit of exposure at some point. I just don't have it yet. And more companies, if you guys just want some ticker symbols, diversified miners are on the left-hand side there. VALE, RIO, BHP, NILSY, ANGPY, GLNCY, FCX, and South32, SOUHY. Those are all kind of bigger diversified mining companies. If you want lower risk, I basically have my money in a lot of those on the left-hand side. Some of them I have a lot in, other ones I don't have as much, just because I really watched VALE, Rio, BHP, NILSY. Those were the big four back when in the first commodity bull market that I saw, and I was like, man, these things are killing it. And then these other ones are ones that I think will do incredibly well over this next bull market. Some of my favorites on the right-hand side, we have ENCUF, which is a uranium company. It's a developer company, good management team in America. I think they've got a good, solid team. Deep Yellow is one of my favorites. John Borshoff, he created a lot of value for shareholders last bull market for Paladin Energy. And I think Deep Yellow, since he's running it, you might as well take a shot with him. And then Baseload, BSENF. That one is run by James Sykes, a geologist, and that's an exploration company which carries more risk. And Deep Yellow was a developer company. SM Energy, CPE, and CDEV are all oil and natural gas companies. They are highly leveraged, which means they're in debt. They got sold off to incredible lows during the last bear market, which we just came out of. So we're going into a bull market. These are highly leveraged, and hopefully they continue their leverage to the upside against the price of oil and natural gas. CDEV it seems like some of these trade pretty good with natural gas as well. So we've seen a pretty good bull market here coming up in natural gas, and I think we're about to break out of that big downtrend pattern. TTI is an oil service company, Tetra Technologies. That one's also very much in debt. So if you want to play the leverage card, do some research into Tetra Technologies. I think it's got a lot of leverage. And then my two silver companies, EXK and DSVSF, I own those. They are probably my favorite silver companies. EXK seems to do very well. Brad Cook is the CEO for them. They have a couple of mines. They produce, and they're also doing some exploration. DSVSF is a explorer developer company. They're low grade, tons of bulk tonnage. So if we ever hit a shortage of silver and the price were to rocket higher, they have massive leverage to that price of silver. When we get above $25, $30, that's when they're going to, I think, really give that leverage. And inflation here, again, this is these companies work well under an inflationary backdrop. They do not do well in a deflation. If you think we're going to have deflation and are scared of a downturn, what I would do, I would limit my position size to commodities, keep a good amount of cash or bond exposure if you think you're going to have deflation coming up. Watch my market conditions updates and real estate updates for market conditions for an inflationary environment. I think we are entering an inflationary environment. And I think by watching the market conditions and real estate, it will tell us signals before inflation were to go away. Again, I cost average into positions to reduce risk and volatility of movements. Now, a lot of these companies, I mean, even some of those big ones in the diversified mining companies, this isn't a smooth ride. I mean, we're going to be going all over the place. We get big pullbacks. They can go many hundreds of percents higher, maybe even thousands of percents higher. And from where we're at today, I don't know if they're going to go thousands of percents, but they still have a ton of upside. They potentially could. I think last bull market in some of them, they were up 20 times your money from the bottom. We're not necessarily buying at the bottom of the bottom, but we've got pretty good entry points even now. But I do think they could do a good amount higher. The diversified mining companies also pay pretty good dividends. So might as well get paid and wait. And if you're going and looking at the individual companies that are more developer type, where they only are developing a single mine or two or three, a lot more risk. I've got a lot less money in it, and you got to position size correctly. So, these are the ones that I own and that I kind of overweighted. I have a lot more individual companies than what I put up here. I have shared my holdings, I think all of my holdings almost, to a lot of people. Or shared it during videos to everyone. So I think if you guys are not wanting to be as integrated into it, the diversified ETF approach is pretty good. If you are looking to dive into things a little bit deeper, I would look at just creating basically your own ETF. And the way that I would weight things, I know some people had some questions on weighting. I carry about 20% of my net worth in commodity type companies, mining companies, maybe a little bit less. And then I've got a good physical precious metals holdings. It's about 25% of my net worth. I've got real estate, maybe 33% or so. And the rest is in 401ks and stuff like that with mutual funds. Looking at more like emerging markets, some precious metals mining companies. There's a bunch of stuff in there. Some healthcare related stuff. So that's how I've got it. Again, this is not financial advice at all. It's just financial education. I'm just giving you kind of a brief overview of the companies and ETFs and mining, all that stuff that I like. Take it for whatever you want. You can take it or not. You can do more research into it. Maybe it'll kind of get you to something that you like more than what you're in already. If you guys like this content, give me a thumbs up. Thanks for listening. This is Finding Value.